Alright guys, so today we're going to talk about something a little bit controversial. Making money in property has nothing to do with the economy. If you're an economist or some smart person, you're probably going to say no, but hear me out. I'm going to talk about 5 things that I think can prove this point. Number 1 is every economic cycle in property has its advantages, right? When we have an economic upswing, your money is cheap. You can borrow money at a cheap rate, and that means you can actually be able to leverage more money to buy a property. But when things are on a downswing, we have bargains and motivated sellers, and we're seeing a lot of transactions right now where people are willing to negotiate even seller financing because of the downswing. That's number 1. The second thing that's important is your tenant demand is always there. It doesn't matter if there's an upswing in the market, as there's a downswing in the market, there's always going to be tenant demand. So what that means is in the downswing, when the market is a little bit tough, you might actually invest a little bit more on your property because of the competition or the competitiveness of the market. But when things go up, that investment pays off because you have a really nice property that has all the bells and whistles that are required by your tenants in the downswing. So that puts you in a position where you are competitive as a property investor. The third thing that's very, very important is innovation never stops with these things. You know, people, there's always going to be technological advancement, and we get a lot of technological advancement in downturns. I don't know why, but that's just how things happen. So that means now when we have a downswing in the economy, is an opportunity for you to what? To look at what's technology out there right now that you can use in order for you to become more successful as an investor or become a successful investor. And I'm talking about technologies such as investRand, of course. Find service providers that are pre-vetted and also get expert advice on exactly how to invest and take the guesswork out of property investing. So that is number 3 point of exactly why this has nothing to do with the economy. The other one is simple: financial literacy. One needs to know their numbers. You cannot go out there and look at opportunities without knowing your numbers. And it doesn't matter what the market looks like. You need to know your numbers. Even if it's a good market, you need to, hey, what's going to happen when the market goes down? And then that's exactly why you need to run your stress cases, and you need to make sure that if the interest spike and spike and spike and the inflation spike and the municipalities increase their utilities on your property and your operating costs get insane, what are you going to do about that? That's something that one needs to know. So you need to definitely understand the numbers. And then the last thing, which is a simple one, is location, location, location. Yes, I know this thing is like a cliche, but it's a really, really important thing, because without the right location, you're not going to get tenants. You don't have the amenities in that area. You're going to be struggling to compete with other people who have better locations than you, saving the same tenants that you're looking for, because there's different demographics that one can serve in the property industry. So getting the right location is something that it doesn't matter if the market is good or the market is bad or is in between. Your job is not to time the market, because you can't. I mean, even the most intelligent people cannot time the market. You just have to look at the opportunities that comes with each market and take advantage of it. So tell me in the comments if this video helped you to understand that making money in property has nothing to do with the economy. It has something to do with you. See you later. Bye.